Good morning, traders, and welcome to the morning update on Thursday, the 4th of February. Well, yesterday was a very interesting and not so good day for trading, in all honesty. We had some bizarre news from one of the Fed FOMC members, Mr. Dudley. We also had the ADP numbers, which came in better than expected from the US, which should have added a little bit of strength to the US dollar. But then Mr. Dudley hinted at no further rate hikes this year. The other bad news, although that was the main contributing news, I do believe, the PMI numbers came in at 53.5 when they were expected at 55.3. The PMI equates for about 90% of the US economy. Although it shows expansion, it was worse than expected. And then obviously Mr. Dudley hinted at no further rate hikes, which caused a huge sell-off in US dollar. So to add to that, I've got to say it was not a pleasant day of trading. We suffered a few losses yesterday. Thank the Lord we had a couple of positions which actually did save the day, meaning that the losses weren't too severe. But what I will say is, and we do reiterate this constantly, have a fixed amount that you are prepared to have in the market at any one point. So always think about your exposure, and I did state this the other day. So when you do have a bad day, the bad day is never going to be horrendous. It will only be a fixed amount or a fixed percentage of your account. So yesterday we ended up taking just short of a 1.5% hit on the account, but it did equate in quite a few losing trades, which we'll run through in a moment. We're going to have a look at the dollar index first of all, so you can see what actually happened to the dollar. This is the dollar index. This is the daily chart. Now, if we have a look, what you can see here is huge sell-off. It started the day at roughly 99, and at some point through the day went down to 96.80. Now you've got to remember that we had a prediction that this market was going to bounce from somewhere around here, and we were looking for dollar strength to push through and at least retouch the 100 area. We were wrong. As traders, we have to have a bias, and we have to trade with conviction and stick to our rules. Now you can see yesterday this completely shattered our analysis and didn't do as we were anticipating. So now at Phoenix Blue, what we will do is we will sit on the sidelines for the rest of this week. We're still in a couple of trades, sorry, not a couple of trades, we're still in one trade. We're still in gold long. We did bank half of that position yesterday. So we're currently $68 up in gold. The losing trades we did take yesterday we're going to run through after we've had a look at the Asian session markets. So bear with me one second. So in the Asian session markets, let's have a look. We're going to start with the Nikkei 225. Oh, why is it? There we go. So what happened yesterday? Well, yesterday we saw the big sell-off after a gap down and a sell-off. Then today we've seen another gap down. The market had a brief rally, closed the gap, it sold off, and it's somewhere pretty much where it opened. So nothing of real interest here. Let's move over to the Shanghai Composite. Well, we can see we're approaching that resistance area that we were talking about. It's gapped up, then a tiny little move. Very, very nonchalant day. Would expect it to test this resistance before seeing further downside. Then, where were we? The Chinese one, again, still going sideways. Nothing of real significance there. We will just have a one look at sugar. This is our other position. Sorry, I forgot to mention sugar. We had a strong sell-off day yesterday, and today we've had a little gap up and it's moving sideways. We will look to add into sugar if we come up around 1350, but again, that won't be anything we're going to take today. So we're leaving sugar and the markets alone today and tomorrow. Too much news. We've got Draghi speaking at the minute. We've got Carney speaking at midday on the UK. We've got lots and lots of news which we'll run through in 1 second. So let's just go to the news. So we've got the Bank of Inflation report, we've got the bank rate votes, followed by the monetary policy summary, and the official bank rate statement where we're expecting to keep it at 0.5%. Then we've got Carney speaking afterwards. He has been known to deliver the odd bombshell, let's say. So who knows where this market's going to go. And then, of course, at 1:30 we've got the unemployment claims. So lots of red news today, lots of red news tomorrow. There will be no trading from Phoenix Blue, only the current positions that we're in. So let's have a look at the positions that we're in and we'll run through where it all went wrong yesterday. So let's start with the euro dollar. We'll go to the daily chart because this is where we like to trade. So our first initial trade came in short at 109.70. We did have a reaction off it, and looking back, it's easy to say, well, you were 30 pips in profit, could have quite easily moved our stops to break even. That's not our rules. So guess what? We didn't do it. The market turned on a sixpence, went straight up to our next entry, which was at 1.1060. Again, we got a nice reaction off it, 20, 30 pips. Again, it's not our rules, so we did nothing, and the market stopped us out. So that was 2 losses on euro. Not a great way to have a day. So we lost, in total on the euro yesterday, we lost a total of 160 pips. Okay, so we trade at a 40 pip stop on each position, but we break that down into 2 trades per position. So if we're equating the total, it was 160 pips across the 2 trades, although each position does only accommodate about a 0.2 to 0.35% of our account risk between the 2 trades. So our next trade that we took a hit on was dollar CAD. We went long at 138.25. It moved a little bit in our favor, but then again sold off quite sharply as oil rose nearly 10% yesterday. So of course the Canadian dollar strengthened on the backside of Dudley's comments. So remember, guys, I know I don't like to brag about losing trades, but guess what? We all have them. It's like being a boxer. You take a few hits in the ring. You have to learn how to take those hits, but survive, come out and victorious on the other side. This is where risk management and trade management comes in. Okay, we're not going to lie to you. We're not going to tell you that every trade we take is a winning trade. Yeah, I know there's people out there that say, oh, they've got fantastic statistics, but we announce our trades ahead of time, and when we have a loser, we're honest about our losers. Okay, so that was Canadian dollar. Cable, this was our analysis. We were looking to get short at 146.30. That we did. Let me just take this down onto a 4-hour chart, just so you can see. So we actually went short at 146.30, which was just about here. So I'll just mark the level in where we went short. So just 4 pips lower than that. Market moved down just over, where did it come to? 145.61. So it moved 60 pips in our favor. We hit our 50 pips first target. We banked half of that, and our stops went to break even. And then this morning, we've just been stopped at break even on our second position. So there was a 50 pip gain there. Kiwi dollar, well, this has just gone ballistic, as have all the other markets that are traded against the dollar. And our other victorious trade yesterday was CAD yen. This came straight into our sell zone, so I'm going to show you why we're looking at it. So this is the weekly chart. We've gone through this on all the other weekly and daily videos. You can see the market came into resistance. We had a nice reaction off it the previous day. So we got a double top. Here was our neckline. The market came down, broke through it. As it came back to retest, we sold here with a nice 50-point stop. We banked 104 pips, moved our stops to break even, and then we got stopped on our second position at break even. So yesterday we banked a total of 154 pips, but we lost 320. Okay, so we were negative 170, what was it? 168 pips yesterday, negative on open trades there. On the flip side, current positions that were running, we had success with Swissy, where we were long at 99.70, and we banked at 1.1 10055. So there was another 120 odd pips banked there. Gold, we're still running it in gold from 1075 down here, and we banked at 1143. So we banked $68 there, but half of that obviously because we reduced half of our position. We've got ultimate targets on gold up over the $1,200 mark. We will be looking to add into this market again. So these are, you can see that on one hand we had some losing trades, and okay, we've lost on some open profit. It did take a hit. In terms of actual capital in the bank, we lost just over 1%. But in terms of the deficit on our account, it's about a 2% fallback, including open P&L that did fall back on some of our other trades. But capital, we lost 1.2%. What else have we got open? The other trade that we've got running is sugar, which I've showed you, and that's running very, very nicely, which we will look to add into. So that is all the news and all the markets that we're currently looking at. We're not trading anything today. We're not trading anything tomorrow. Today and tomorrow is a time for reflection and review. Could we have done anything different? And from what I looked at yesterday, we wouldn't do a single thing different. There's days where you get it really right, and there's days where we get it wrong. If your risk management and your capital preservation is all intact, guess what? You're never really going to have an horrendous day. Okay, guys, thank you for listening to our update, and we look forward to seeing you tomorrow. What I will ask just before I go is if you have enjoyed the video today, and please look at our previous videos. We do a morning update every day. We also have other videos coming out on a Tuesday, Trading Tuesdays. We do have a long video coming out every other weekend called Dissect and Detect. These videos will only be open to the public for the coming months or weeks. These are for our clients, but as we are a new company, we're putting them out to everyone. If you do have any questions on our analysis and our trading, please email info@phoenixblue.co.uk. We do post most day on Instagram at Phoenix Blue Trading, also on our Facebook page, Phoenix Blue Trading. Okay, once again, thanks guys. Sorry about yesterday. We do have losing days, and I look forward to speaking to you in the future. Take care. Bye-bye.